Good afternoon, everybody. I believe we're the slot before lunch, so hopefully we'll give you lots to whet your appetite and plenty of food for thought as well. So rebuilding trust in a trustless system. Failures in crypto and blockchain investing in 2022. Lots to digest, and we've got an excellent panel here to do that. So I would like each of them to introduce themselves to you. Maybe we'll start with Matteo at the end. Who you are, where you come from.
Yep, thank you. So, Matteo Dante-Perruccio, I'm president of International for Wave Digital Assets. We're an 1 billion plus SEC regulated asset manager based in Los Angeles. I'm based in Europe. And we've recently acquired also a FINMA regulated asset manager, digital asset manager in Switzerland, in Geneva. And we manage assets for institutions, for protocols, and for other institutional investors.
Hi everyone, my name is Ijeoma Okoli. I'm a finance and regulatory lawyer. Currently, I am a digital assets consultant, and I am the director of the Digital Economy Initiative, which is a think tank focused on crypto assets policy in the US and the UK. Previously, I was at JP Morgan, and I co-designed the risk management and governance framework for cryptocurrencies and advised them on business proposals relating to crypto.
Hi everyone, my name is Shobhit Maini. I'm the co-head of digital assets for Citigroup Global Markets. I'm responsible for all things digital assets, from strategy definition to all the way to its execution for our global markets business, which is our principal trading business.
Hello everyone, my name is Kokila Alagh. I'm founder of KARM Legal Consultants. We're a law firm based out of UAE working in the emerging tech sector. In the last 5 years with the journey where we started, we've just been working with clients in virtual asset service and getting them licensed and regulated from UAE, and also working with a couple of regulators in the Middle Eastern region to come out with framework for these new age assets. Thank you.
Thanks, Kokila. So I think, brilliant panelists. We've got a couple of legal experts, asset managers, and mainstream financial institutions as well. So a good diversity of thought, hopefully. I suppose let's kick off looking back a bit and dissecting last year's events. So I think Warren Buffett, we won't say what he thinks about crypto, but he has said recently, in the past, that a reputation can take 20 years to build, but 5 minutes to lose. So reputation is everything. I just want to look back at last year. Obviously, it was a challenging year. We sort of lurched from crisis to crisis with Terra Luna, obviously culminating in FTX in November last year. What really did go wrong? And maybe, Matteo, starting with you from a sort of asset management perspective, where you sit as well, looking back at last year's events.
Yeah, I hope we can talk more about the future, but past, I mean, I guess I'm a little bit self-interested because we were able to avoid all of the pitfalls that happened in the last year and a half in crypto. I would argue that most of what transpired and what we've seen as major events in crypto, negative events in crypto, have had very little to do with crypto itself or digital assets, but everything to do with poor risk management. Bad actors exist some of it is related to bad actors that exist in every industry. We've seen plenty of it in banking recently, and we see it over the years in hedge funds and in all sorts of other industries. So I don't think that's particularly unique to digital assets. I do think what we're seeing, though, and we have to acknowledge, is that it's a young industry, and it's growing up. It's maturing, and that process is often, like in human beings, it's a complicated and difficult process to go from being an adolescent to an adult. And I think that's what we're seeing now, and we are certainly seeing now institutional interest in a flight to quality, so being SEC regulated, being FINMA regulated, those kind of things matter a lot more now than they did in the past.
So I think I completely agree with that. I think on the side of the crypto asset market participants or players, it definitely was a lack of governance, lack of risk management and the like. That's what we saw, which is not unique to crypto. However, on the investor side, I think some of what we saw was actually, FOMO, fear of missing out. Because I think what other thing can really explain what we've seen in relation to FTX and some of the reports coming from the bankruptcy case about their records and the record keeping, the lack of governance, the way money moved in and out of the company. I think that, but then there are sophisticated investors that actually invested in FTX and actually lost basically all of their, the capital that they put in. So I think it's perhaps them not, following through with the normal due diligence that they would otherwise have done and basically invested because they feared not actually being able to participate in something that looked like it was going to the moon.
Could I just want to make one quick response to that. We have short memories. We forget about the mortgage-backed securities and Lehman Brothers. There were plenty of very sophisticated investors that had bought those. There was all kinds of portfolios where there was no due diligence done, and they slapped a rating from Moody's or Standard & Poor's on it. I'm not suggesting that you're not correct, but I do think that these are indicators of a frothy asset, no matter what the industry or what the sector. This is kind of, when people see markets going up, they buy because they want to be part of it. So yeah. I'm not sure it's entirely unique to crypto.
No, I don't think so, but I think it's what happens.
Yeah, oh yeah, for sure.
When I think about the events of last year, I'm just reminded of something that Isaac Asimov said, which was like, science gathers knowledge faster than society gathers wisdom, right? So we had this huge spate of innovation over the past couple of years, right? A lot of exciting things built. And everyone saw technology as a way to solve everything there. But technology, particularly specifically in the case as it relates to financial services, technology can help you scale solutions to problem, but it's not the only thing. It needs to be wrapped up with strong governance, strong risk management, strong legal frameworks. And I think that bit was something that the industry learned the hard way. And I hope, right, as the industry goes forward, we take some of those learnings and we wrap all the great innovation that has happened with some of the boring, non-sexy things that particularly financial services industry has learned over many decades.
I think what's happened last year, if I have to say, is very interesting because firstly, digital assets to get a recognition as a financial product has been a tough journey for this sector. Initially, most of the people in this space, say 15 years, 16 years now in this space, initially there was lack of awareness, lack of education around understanding what actually a digital asset or virtual asset is, what's the difference between a cryptocurrency token, which is still a long way for us to understand. And then regulators globally taking a stand of either saying, oh, we don't want to regulate this, we don't understand. Now that was one that pushed this industry back. We had different class of investors, like just on the Hive's presentation here, and we were talking about crypto culture. So you have investors in the crypto who are not going to a financial consultant or a financial advisor to either buy those tokens or not. They're going to the YouTubers, they're going to the influencers. Are they even the right people? That's another subject that we can discuss. So what we saw last year was, yes, this sector not being properly regulated, not having proper governance. Now, in fact, what I would like to hear and understand in this year is that even if a regulator comes in this space, what mindset do they need to come up with? We're talking about an investor class of kids who are exposed to making game tokens, investing and trading. My 8-year-old does it. It's a financial product. We've got influencers who are 15, 16 YouTubers making millions. We just saw the presentation. Now, what mindset does a regulator need to bring in this? We're talking about a huge cultural shift. What has happened last year and what maybe will be another 5 years, 6 years, we will have these discussions. And I'll tell you personally, I'll be very excited to see what we come out with.
Thanks all for that. I think really interesting. Summarize, I guess, the adolescent years, and it's time maybe for crypto to start growing up a bit, and more maybe suits back in the room. and less hoodies we'll see over the coming months. I suppose, so what's next for the sector in terms of needing to rebuild that trust? How can we stop an FTX from happening again? I
don't think we can actually stop an FTX from happening again. I think the purpose of the solution could probably be a comprehensive legal and regulatory framework in the US, the UK, and the implementation of MiCA in the UK. I think the purpose of regulations is to mitigate the risk, but I don't think, all of a sudden you get to a situation where it's 100% effective, because even with a highly regulated financial services sector, we saw in the past, we saw Lehman, fairly recently we saw Silvergate Bank and SVB. So I don't think it's that it absolutely won't happen again. It's how do we mitigate the risk of it happening again? And the way we do that, the first thing we do is, I think, we definitely need a comprehensive legal and regulatory framework, firstly in the US and secondly in the UK. The EU is already on its way. Thirdly, I think education is key. I think education of the actual legislators and regulators that are actually going to be putting these things in place, but education for the investor education as well. So those are two things that I would say, particularly the first one, the implementation of a framework that is actually key to actually make this sector a lot safer for people. That's my initial.
I think that I agree, and I think that we should think about it maybe slightly differently, in that the only way an industry can grow up and the only way that investors can feel more comfortable in investing is when they have more data points in which to understand how an asset behaves in different environments. And so this might sound counterintuitive, but I'm actually, I'm quite content with some of these major events happening in succession, because it compresses the time that you need to understand how this industry is going to look as it matures and changes. And I think the problem with what's happening and about the need for regulatory is, we're seeing two sort of schools of regulation. We're seeing what's happening in the United States, which is clearly a backlash reaction and probably knee-jerk, not particularly constructive regulation. And my partner defined it or described it with a metaphor. He said it's like driving down a road with absolutely no traffic signs and no markings, and trying to figure out the rules of the road by who the police pull over. And if you think about that, that's what's happening right now in crypto. They're waiting to see, can I do this? We'll say, the SEC has just pulled those guys in, so I guess I can't do that. Let's try it this way. That's not a healthy environment, and you're going to have accidents, right? So I think we need thoughtful, and then we see other markets like Switzerland, other jurisdictions like the MENA, where they're being a lot more thoughtful about how they're regulating digital assets. So I think we definitely need regulation, and we need things like the Shanghai upgrade. That's a hugely important milestone for institutional interest, because now they have a liquidity profile. They can understand how ETH functions in their portfolio from a liquidity profile. It's clear now, and I think we're going to see a lot more institutional interest in ETH, for example. So all these things are happening. I'm quite optimistic.
So sorry if I can add. So we've seen regulation by enforcement not being a great example. We've seen in some of the countries, some of the largest countries in the world, where no regulations is not a solution. So definitely what Middle East, or especially UAE, Bahrain have been doing is that come out with the regulations, be ready with it, is the way forward. What would be interesting is when we're talking about a global digital product of such stature, will just regulations from one country be able to resolve that? So yes, I can take control of, you're licensed and regulated by me and I manage you, but your product is global. So I think this is going to be a journey where regulators need to work together globally. I think that would be a game changer for this product, because we're talking a very different asset class. We're talking a very different range of people coming in it.
How realistic is that?
Yeah, I don't think it is really realistic. They're already working together. They're working together in the Financial Action Task Force. They're working together to come up with Basel proposals. They're working together, but I don't think it is possible to have one set of rules across the board for this asset class, because each country has its own legal history.
Absolutely.
And so it's not going to adopt. But just one clarification about the US. The US already has rules that actually are, that already apply to this sector. So some of the enforcement actions have been, if you're a securities lawyer, you're like, okay, what took them so long? Others, yes, you're left scratching your head, how did this happen? And you have, like, within the SEC, which is the most active regulator in this space, even within the SEC, there's a commissioner who basically objects to a lot of the stuff that they're doing and saying, yes, this doesn't look completely okay, but what is the alternative? What we need to be doing is talking to the sector, as opposed to when they come in and talk to us, all of a sudden there's a Wells notice, which is a threat to sue. So there are things that apply. It's not carte blanche. It's not a blank slate. But I think there's a lack of clarity, and there are a lot of gaps in the framework.
I mean, what I would also add over there is that this enough been discussed about regulation over here, so I'll not venture there. But I think it's also up to the intermediaries and market participants, right, to be sensible and reasonable about how they're behaving, taking a long-term approach, because building a long-term sustainable business is hard. It requires taking certain difficult decisions, taking the hard path, right? Which right, in the hyper quick world of digital assets, right, might mean that you might miss out on certain opportunities. You might miss out on the opportunity to make a quick buck now, but that creates a business that is long-term sustainable. And we know that, right? We know of the firms in this space who've gone the hard path, made a trade-off between taking advantage of short-term inefficiencies, but building a business which took time to build, was hard, and maybe cost but there was an opportunity cost associated with it, right? So even like no amount of regulation, right, can make up for that mindset that anything which is long-term sustainable, it's hard. It's just hard to build. And like the other thing, like I don't say that we see it with every firm, but we see it with a substantial number of firms, is that focus on disrupting financial services without understanding how financial services really works, right? Because there are certain structures that have been created in financial services over the decades that have existed for very good reasons, right? And we keep on learning these lessons in digital assets in a speed run, right? So, for instance, segregation of custody and execution, right? Which has existed in TradFi for forever, right? But this is something which came into the fore in this space only last year. But I mean, obviously, right, if the industry had looked back, it's not everyone, but like at least certain actors had looked back and seen why it existed, we could have avoided everything that happened last year.
In fact, just to add it here, so this one point of segregation of custody from the whole platform is something that ADGM, one of our regulators, thought of it in 2018. They made it mandatory for anybody applying for an ATS MTF license to make sure that you apply for a separate custodian license. In fact, now one of the other regulators have gone deep dive into the whole governance structure also of how, as a group, if you are offering these services, how will this be? So I think, as you said, that it's a learning curve for all of us in this space. And we as intermediary, all of us in the service providing sector here, there's a lot even on us to make sure that, it's the right players with the right mindset.
I just want to, unfortunately, I think I'm the oldest one. I think I know I'm the oldest person on this panel, maybe in the room. But 35 years of asset management experience, and again, memories are very short. Madoff. All those structures existed when Madoff blew up. We had separation of custody. So I really caution people, this is the problem, I think, of the way that we address the digital asset universe. It's an asset class. These are financial assets. And we think of it as some sort of different animal that isn't applying the rules. Yes, that's true in some cases. And obviously we had bad actors and fraud, but we've had structures in place for the last 30 years that have proven insignificant and ineffectual when people want to do something. Either there's a bad act or there's complete negligence. We just lived through SVB. I mean, how is it possible that one of the top banks in the US blows up because interest rates went up and the regulators weren't aware of their portfolio? I mean, these are the most basic of concepts in financial markets. So I think the real challenge here with digital assets and instilling trust is getting people to understand, starting to use the proper nomenclature, stopping with cryptocurrencies, and stopping with these sort of broad terms that create confusion and conflate what we're talking about. You know, digital assets is a huge, broad term to cover all kinds of both financial and non-financial assets that are based on a revolutionary technology, blockchain, which we've all accepted. And I love how people will say in one breath, oh, I totally accept blockchain, but I don't like crypto. I don't even know what that phrase means. So I think there's a lot of education that needs to take place, to your point, with regulators, but also amongst ourselves, being a little bit smarter about how we talk about the sector and what we say about it.
That's interesting. I think, Ijeoma, you mentioned sort of needing to build awareness and education. What are some of the channels that can be done to sort of build that better understanding, better knowledge, and who's the onus on to do that? Is it industry, the crypto industry, or?
Well, I think from a regulator's perspective and legislative bodies, I think it's incumbent on them, but I think it also is incumbent on the sector to help with that process, because history, again, we look back about a decade ago in the aftermath of the financial crisis when previously mostly unregulated derivatives market all of a sudden had, Dodd-Frank, Title VII, and MiFID and EMIR come into place. And particularly in the US, what was put in place, a number of the things actually did not work, such that the CFTC, which was the major regulator at the time of the derivatives market, still is, but it was responsible for putting in most of the new regulation. They had to issue exemptive orders so that people didn't have to comply with clear rules that said they had to comply, but they recognized, because the industry came to them and said, this doesn't work. For example, clearing. There were requirements to clear one trade in both Europe and the US. That's impossible. So, they came to some sort of agreements among the regulators as well. But in order for that to prevent those sorts of things from happening, the industry needs to engage. Investors need to learn. I think none of us here knew anything about the sector prior to deciding that we were going to embark. My journey has been 6 years. So it's incumbent on us, it's incumbent on the industry, it's incumbent on investors, but I think the industry needs to help regulators, because if we don't, what they may very well put in place may be disastrous.
Interesting. Kokila, what are you seeing from where you sit in the Middle East? Sort of there's a new virtual assets regulatory authority that's been established. They seem to be ahead of the curve when it comes to this sector.
Yes,
what
absolutely. Middle East quite proud of what we've created, is because unlike any other regulator, where we've tried to fit in digital assets in an existing financial regulatory system, we're talking about creating a bespoke regulator just for this asset class. Mainly because the struggle that most of the service providers have gone through, or insurance companies have gone through, is that a regulator not understanding the product to the level at which one needs to understand to even tell them that, okay, this segment of yours could be in a non-regulated sector, this needs to be licensed. So this is where Middle East has taken a very different approach. Now, just even before VARA, which was launched last year, and the regulations came out 2 months back, even with the regulators existing, like specifically ADGM, unlike, again, like the SECs, where you actually, as a new service provider in the virtual asset space, an exchange, a broker, could walk up to the regulator and explain your product. That this is what we've been doing, lack of license, but we say are operating from one of the remote islands. But now we want to enter into a more structured framework, not even say a regulated, but we want to be organized. So the regulator's been very receptive of it. It's like we've seen ADGM regulations gone through 3 amendments in the last 3 to 4 years, and every few months there's a feedback that us as a law firm have also participated in it. It's the same we're seeing with VARA. In fact, VARA has got an interesting story. They got launched last year in February, but the regulations came out only in this year. So in the last 1 year, what they did is that they collected like pretty much the large industry players, some of the service providers, technology experts, everybody to work together to create a framework. So it's a framework not just coming from top down, but everybody has participated and given their feedback, and they've been very open about it. Now that's a whole new outlook a regulator has come out with, and like in my experience of 20 years as a lawyer, this is the first time I'm seeing such openness coming out. So this is where I think Middle Eastern custom countries have taken a very different approach.
Interesting. Ijeoma, are you seeing a lot of work being done by regulators? What are you seeing from a legal perspective? Is this going to be a year of great change? Obviously, we have MiCA being discussed in Europe. I think still waiting for a vote there. But what are your thoughts on the regulatory landscape?
From a U.S. perspective, I don't, given the dynamics of the way laws are passed and politics, I don't really see much happening that changes. I think I see some things. I think this sector, crypto assets, it's a bipartisan issue. So you find both Republicans and Democrats working together in some sectors, particularly in the House, the lower body of Congress. But I think the time it takes, I don't know that we'll have a comprehensive legal and regulatory framework. What I hope might come from some of the regulators is more clarity. I think just this week, the Investor Advisory Council of the SEC basically commended Gary Gensler for everything that they've been doing, but they did have one suggestion for the industry, for the SEC to make it possible such that the industry can send them questions about what they perceive to be unclear, and then the SEC actually responding to them with actual guidance. I think that will be actually groundbreaking, because heretofore the industry has been saying we've been going to the SEC and they haven't responded. Particularly Coinbase has been saying this a lot. So if the SEC actually does take that advice and actually provides a mechanism for the industry to feed it questions about the areas where there's a lack of clarity, and the SEC specifically responds, maybe with interpretive guidance, kind of like what the Office of the Controller of the Currency has essentially done in relation to custodying crypto assets. It's been very clear about that. Then I think that will be a groundbreaking, I think. The time it takes for those things to happen, it may not all be done this year. There may be some legislation that comes out of the Congress this year, but just the timing, I don't know. But if we think about the next 2 years, then maybe there's a possibility for more to be done. In the UK, I think it's possible that I think there's a financial services and markets bill that's coming out, which defines crypto assets and digital settlement assets, which will take into consideration things that we currently call stable coins, and then leave it up to the Treasury to actually specify what the rules are. So I see potentially more happening in the UK than I do in the US.
Okay, that's interesting. So we're seeing some regulatory frameworks come into being, and it's sort of a gradual at gradual pace, I guess. I guess moving on to sort of institutional grade infrastructure and what's needed from that perspective. Shobhit, do you have any views on what we need to see?
Sure. I think in terms of infrastructure, we very much focus on organizations like exchanges, custodians, etc. But I think aspects such as legal frameworks, legal agreements, right, standardization of those things are a very core part of that infrastructure. So some of the things, like something that happened last year, for instance, right, was ISDA, or earlier this year was ISDA had this working group which was working on legal definitions and standard contractual terms for derivatives in digital assets, right? And what those kind of things do is they create standardized set of processes for trading these instruments, right? It might seem trivial, but what it does is it standardizes processes across the industry. Everyone knows that if event A, B, C happens in the life cycle of that trade, what will happen? So everyone has clarity. And things like these, right, help the industry scale. Now, this is just one example there, but I mean, risk management, right, it's an area, like, I think everyone in the space learned about a concept called counterparty risk, right, which, like, we in our day-to-day job, we take very seriously. Most banks learned it the hard way in 2008. So it's infrastructure development on that side, and what we're seeing is, like, speaking to like companies that are building now, we're seeing a lot of work going on those aspects, but it's a journey, right? It's not something that an event happens and you can get it done in 3 months. It takes time, right? And which is fine, and which is the point I was making earlier, right? Building a long-term sustainable business takes time, right? I mean, chasing for short-term opportunities will lead to making suboptimal decisions and trade-offs.
I agree with you, but again, at the risk of being problematic, I think that we have short memories. I mean, banks, you work for Citibank. I'm old enough to remember Citibank being the largest bank in the world, watched it almost fail, watched it come back and become one of the largest banks in the world again, watched it almost fail again. About every 10 to 15 years, we have a banking crisis, right? And there's plenty of infrastructure, plenty of rules, plenty of commonality about how banks are supposed to operate. And I don't mean to play. It was just a joke about Citibank. You could put every other bank in the list. We've watched banks get bailed out here and there and everywhere, right? And so I think what we're missing in this industry is are points of reference of good behavior, points of reference of trust. So let's take banking now. Citibank or Bank of America or J.P. Morgan are considered safe banks, well managed, well structured. So people have a point of reference to say, if I want to work on the safer spectrum of the industry, I work with them. In our industry, we kind of have some emerging, like a Coinbase. Whatever we feel about Coinbase, they're big. People feel okay, they're a significant player, I can work with them. We need 5 or 6 of these types of players to give people a sense of trust that the industry has in each sector. If they want to trade, these are the safe guys to trade with, and there'll be newcomers and there'll be some that'll fall from the pedestal. We're not there yet. What we have is just so many providers of services, so many providers of all kinds of assets and structures and that's, I think, one of the challenges right now for trust. The name of the panel, Rebuilding Trust, right?
That's really good, Matteo. I see our time is almost up. I suppose there are any other comments or thoughts from anyone else on the panel in terms of sort of rebuilding trust. I think Matteo sort of put it very well when he suggested that it's unfair maybe to always point the finger at crypto, and actually we're seeing crises in other sectors of the financial services industry. But having said that, it is still at a very early stage. We're sort of seeing some crises maybe more here than in other places. Is there anything else that anyone on the panel wants to sort of add to that summary?
I think, just touching upon, so I don't know if it's, because the whole point of blockchain is that you don't need to trust anybody, right? So I think it's more about confidence as opposed to trust, because being trustless is embedded in the very nature of the technology. I think, so the infrastructure, I think, I think there needs to be a little bit more work done there, because all these hacks that we keep on hearing about, that is not sustainable. So I think in terms of security of the networks, I think that's something that a lot more money and time and brain power needs to be spent doing as well.
Shobhit, Kokila, would you add anything?
I think this technology is fighting for its very own existence. So we have words like decentralized, we have words like transparency and trustless, which pretty much defines this great technology we're talking about. And now all of a sudden, these are the issues which we are trying to see. So this has been my take for the longest time, that we're talking about a very big mind shift change when we're talking about this technology. Does it need all these things? Like, when I'm looking at this thing, rebuilding trust in a trustless system for a technology which is trustless. So it's very interesting. We are in very interesting times. So, yeah.
Thanks, Kokila. Shobhit, do you want to?
No, I think the way we think about it, we obviously see a lot of promise in the technology, right? And which is why I'm here and some of my colleagues are here. So it's here to stay, right? The question becomes, how do we harness the power of the technology in a manner that's safe, right? And look, as I said earlier, technology alone is not sufficient. There needs to be other things that technology needs to be wrapped with, right? As I think Peter Parker's uncle said, with great power comes great responsibility, right? the technology has given us the power, but like it comes with responsibility as well to behave in a manner that gets rest of the world confidence. I mean, Kokila and I were talking before meeting, because this space is a bubble, right? Like this space thinks that this is the entire, but this is not. The world is way beyond it. How does it extend to a world beyond this bubble, right? And that comes with behaving in a responsible manner.
Yeah. One thing to add is that it is incredible that how this whole sector, which is still a very small population, has created this major FOMO. You know, where even if you've not invested in it, it's something that you've heard about, and everybody like I've gone and spoken to, has an opinion or something to say about it. So it's catching up. I think it's still at a very nascent stage.
Perfect. Hopefully we've got behind some of the headlines, but there's obviously lots more to discuss. I believe lunch has started, so that just leaves me to thank our panelists for being with us today. Thank you.
Thank you.